guys, if you want to introduce yourselves, and then we'll jump in directly into the questions, Stefan.
So I start. So thank you very much for the invitation. My name is Stefan Tomanek. I lead the team that is responsible for the authorization and supervision of crypto asset service providers in Austria. We are also responsible for sending delegates to European and international forums. And the remit is actually quite broad. We are also responsible for the FMA sandbox, for the FMA's fintech contact point, and for the application of AI in financial markets. So quite a broad remit. Thank you for being here and eager to share our perspective.
Amazing. And thank you very much for flying very early from Vienna this morning. Charles.
Thank you, Antoine, and thank you for your invitation. I'm Charles Moussy. I'm the head of innovation and digital finance team at the AMF. For those who don't know, the AMF is the French financial market regulators. And my team is in charge of all aspects related to policy and regulatory in the field of innovation. So, of course, including blockchain and crypto assets. And like my colleague, we are also in charge of the fintech hub of the AMF.
Great. Matt.
So fantastic to be here in this beautiful space, absolutely amazing, and some really exciting discussions coming up. I'm Matthew Osborne, and I'm the Director for Policy at Ripple. Ripple is the leading digital assets infrastructure provider. So we have products including payments network, custody solutions, stablecoin that we issued late last year, and also solutions that we build on the XRP ledger for digital assets and tokenization. And our customers tend to be financial institutions and other sort of large, sophisticated, regulated firms.
Amazing. So let's start with MiCA. Like the EU has opted for like a single comprehensive framework through MiCA, which entered into force in June 23, and then it was phased in 24 for different use cases. But before that, like there is like MiCA, the mission of MiCA is to sort of like bring harmony across the different member states. Before that, we saw, and especially in France, some first like attempts or like attempts to regulate crypto, and some of it has been then included in MiCA. And I think the case of France is not because I'm French, but like the case of France is I think is an interesting case. Before we dive into MiCA, Charles, can you give us a little bit more perspective on what happened in France like before MiCA and why this is kind of important in how we should think about MiCA?
Yes, thank you, Antoine. It's true that in France we have some kind of deep interest in crypto activities since quite a long time now. You mentioned for your company 2018, I think, in your introduction. And actually, at the AMF, we created the first innovation team mostly dedicated to crypto in 2016. So it's quite a long journey so far. And the idea when we created this team was to, of course, have a explanatory view on what is crypto. But back in the days, well, of course, they had no regulatory framework at all. We saw a lot of companies created, for example, ICOs, being the roots of what we could call them after crypto asset service providers. And so, first of all, I think the idea was to have the first to know how to interact between crypto and the traditional finance world. And I think that should be the first difference. Maybe we're going to talk about the difference compared to the US and the EU, but it was in 2017 that the National Competent Authority, including the AMF, worked with the European authority, which is called ESMA, to draw the line between what's legally is a crypto and what's legally is securities. And this line is, of course, crucial. It's very important to build activities and to have legal clarity on the crypto. And this line has been drawn almost 10 years ago now, and in the US it's not yet there. So I think that's the first point. more specifically speaking to France, of course, the idea was to create a dedicated framework and work on that, but also not to push away the players who want to create some new business models. And that's why we create a local framework, a national framework, which is both mandatory and optional. This framework was mandatory on the base rules on EML, CFT, and fit and proper of the managers and shareholders. We call that the DASP registration. But for the players who wants to have some kind of quality label on their activity, then we create also some optional licensing. And this optional licensing I guess, led to MiCA, because this national licensing is a very broad scope of requirement, kind of similar to what we saw in the traditional finance. So why MiCA? Of course, I'll let my colleague speak on that after, but MiCA for us at GMF was the obvious choice, because of course crypto are cross-border by nature, so it doesn't make sense to reduce crypto at national level in a regulatory framework. And back in the days, before MiCA, you had 27 countries in the EU and 27 different regulatory frameworks. So for players who want to create businesses, it's a nightmare. So of course we had to implement a harmonized regulation. And on the other hand, you have customers who doesn't know exactly when they want to buy crypto, what regulatory framework apply to the company they are contracted with. And that's also a very important thing, because if you want to have more mass adoption of crypto, then you have to have basic rules who apply to every actor with much more clarity. And I think that's the two main improvement with MiCA.
Very cool, thank you. Stefan, so let's deep dive a little bit more into MiCA and what it is and what are the kind of the advantages that he brings. So obviously Charles talked about like the harmony that he brings. Can you tell us a little bit about what are the other advantages that MiCA brings?
Sure. So first of all, I would like to echo what Charles just said. That are the main advantages that you have in a harmonized framework. And then maybe let me share the Austrian perspective on MiCA and how we approach this. So maybe some background information first. The Austrian FMA is an integrated regulator. So that means we have the banking supervision, insurance supervision, security supervision. We are even the resolution authority, and also the field of AML and CFT is in our remit. And that means 2018, we didn't have a dedicated framework like France, but we were already responsible for the 5th AMLD, for the national transposition of the 5th AMLD. And we had quite a lot of learnings when it came to the supervision and authorization of virtual asset service providers back then. And we also had in Austria one large player. And with a large player, you always learn a lot, of course. There are differences depending on the size of the players. And one learning that we had in the old regime that was just described by Charles, with the peculiarity that you can only provide services in the jurisdiction where you have the national license, was that the crypto industry was back then, more than it is now, a young industry that was very much focused and naturally on growing. And for some entities, it was quite a struggle to integrate a culture of being compliant. So that was a growth that has had its way over the past years. And we have seen companies struggle with being compliant. We also had the necessity to revoke some registrations. And our learning from the 5th AMLD was that we have to change our approach within the FMA from being reactive to being proactive. So what we did with MiCA was a couple of things. We set up a whole dedicated unit within the FMA. First of all, really building capacity. And second of all, we tried to engage early with the market. And we also tried to produce a lot of guidance documents. So I think that the largest document that we have is a guidance document for the authorization procedure that has, I'm not sure how many pages there are right now, but from the start it was more than 160 pages, which was quite an effort for us also to produce, to help those players. And we have seen, from my perspective, a great success in our approach right now. And then we have the perspective of MiCA and the advantages and disadvantages. And one thing that is very strikingly when it comes to this is the differentiation between financial instruments and crypto assets that were already mentioned. So there we see still a little bit room to improve, also on a European level. But we see that national competent authorities within those ESMA committees are trying their best to find a harmonized approach. And we feel that the MiCA and also our way is quite fostering the legal clarity for all the market participants.
Great. Matt, so give us the UK perspective. Obviously, there's been these initiatives, local initiatives in Europe, and then I go to MiCA. In your UK perspective, like how you guys is seeing this and also learning from what has been happening in Europe to implement regulation in the UK.
Yeah. So firstly, to echo what Stefan and Charles were saying, I mean, MiCA was a great achievement by the EU. You know, it was the first major global jurisdiction to introduce comprehensive regulation for crypto assets. And that has had a great impact on the industry because it provides regulatory clarity to firms hoping to offer services in the EU. You know, depending on what you're doing, you can look up which regulatory activity it is, what regulatory license do you need. You can then go and get that license from one of the national competent authorities. So that regulatory clarity has been really welcome, and it has sort of driven a surge in activity in crypto in the EU. We've seen that in our own business. So, you know, we have traditional financial institutions who previously probably would have avoided crypto, come to us and, you know, say we're building out digital asset strategies, and, you know, we need some help with that. So this is you know, something the EU should be proud of. Having said that, I think there's a disadvantage of being the first mover, which is that you don't get everything right, and there are definitely some areas where, you know, certainly the industry would prefer MiCA could be improved. And I think this comes to your question, Antoine, because I think the UK has now only recently introduced proposals for its crypto regulatory regime, and, you know, the industry had complained a lot. The UK had delayed its crypto regulation for quite a long time for various reasons, and this had created a lot of regulatory uncertainty for the UK. But there is an advantage of that, which is, as many people have said, the UK has this position of being a second mover, so they can look at what other jurisdictions have done. They can try to learn the lessons from that. And there are a couple of distinct features of the UK approach, certainly compared to MiCA. One of those is the international openness. You know, the UK, and London in particular, where we're sitting right now, is well known as an international financial centre. So, you know, this is a place where people come from all over the world to do business. And there's no reason why, you know, London shouldn't also be a centre for digital assets, you know, given that's likely to be the future of financial markets. And so you can see that in the proposals that the UK has made. So, for example, under MiCA, stablecoins are required to be regulated, issued, and backed locally within the EU. So MiCA sort of forces the localization of stablecoins. The UK, by contrast, has a local stablecoin issuance regulation, but it also allows for overseas issued stablecoins to be used in the UK. So the UK can be a hub for stablecoin and for digital assets trading and settlement. And the other difference that's worth mentioning is just the way that the regulations work. So you can really see in the UK's proposals that they've tried to come up with a regulation that recognize the fact that the crypto industry is still in its infancy, really. You know, regulation is relatively new to this sector. The rules tend to be more principles-based, more outcomes-focused, compared to MiCA, which is a very detailed regulation, which sort of takes a lot of requirements that apply in traditional financial markets and applies them to crypto firms. So that again is a sort of quite an important difference between the two approaches.
Let's talk about stablecoins, because I think it's a very interesting area, not only because like it's an interesting like object, I think, like for regulators, but also because there's like a strategic dimension to it. Like there's a geopolitical strategic dimension to it that is interesting. What is, from the European point of view and maybe from the MiCA point of view? So Matt talked about the UK approach to stablecoin regulation. Like, how is the regulator or the different local regulators in the EU seeing stablecoin regulation, especially in the context of like seeing this as like a sort of like a strategic move that they need to do right? Like, can you maybe tell us a little bit about your perspective, Stefan, on that specific point?
Sure, I can start with it. So maybe also a disclaimer first. Our team is not responsible for the authorization of stablecoin issuer, so there are limits to what I can say, of course. But the MiCA is differentiating stablecoin in two categories, basically, in e-money tokens and in asset reference tokens. And it requires, in differentiation to normal crypto assets or other crypto assets, as they are called in the MiCA, the issuer to be fully authorized. So what we have seen so far in Austria from our colleagues is also in this area some challenges when it comes to the differentiation between especially asset reference tokens to traditional financial instruments that are already regulated, especially collective investment schemes. And it was quite some challenge for us for the first weeks and months for our colleagues, of course, but we were involved to some extent. And the approach that we have taken is that, of course, everything that should be regulated under the MiCA does need to have some opportunity to grow and opportunity to also be regulated. But this was tricky, of course, because as a regulator, you're not a legislator. So our role is not a very strategic role in this sense, from my opinion, but we are here to fulfill our mandate, which is basically to supervise the supervised entities to be compliant. So what I can say from an Austrian perspective, also from our government, that there are maybe first thoughts about what could be done with stablecoins from a strategic point, but there's nothing substantial right now. What we see is that there's an appetite, especially from also the traditional finance industry, when it comes to stablecoins. So stablecoins is surely a topic that is growing of importance, and I think, Antoine, you also pointed it out, the importance of stablecoins, how this has developed over the years. And what we see from our perspective as a team, from the authorization and supervision of CASPs, we see, of course, that stablecoins are right now one of the backbones of the industry. So this is very crucial for a lot of crypto asset service providers. It provides a lot of liquidity, and therefore we also are very, very sensible when it comes to restrictions of certain stable coins. And this is something that is also publicly available information, but this is discussed, of course, on a European level. And our stance is that we have to be very sensible in Europe to not shut down the liquidity issue.
Just on that, and maybe it's a little bit, it's not off topic, but maybe out of your scope, but yeah, you represent the institution, but also, yeah, I'd love to hear your thought on that point. It's the, so there is like, there's a strategic dimension to it, as I mentioned, because eventually behind this dynamic, it's a currency war, right? Like if you're looking at the stable coin, like the differences of like USD backed stable coin versus Euro backed stable coin, it's night and day, obviously, and it doesn't seem to be changing. And so maybe, Charles, from your perspective, like what do you think should be the role of European regulators in this like currency war?
Yeah, on stablecoins, I have to say the same disclaimer as Stefan, because at the IMF we are only in charge of crypto asset service providers and monitoring market abuse, and there are another authority in French which is called the ACPR, the Payment, Banking and Insurance Authority, which is in charge of licensing stablecoin. But what we can see as a financial market regulators, and I have to echo Stefan on that, is that stability plays definitely the central role on functioning of crypto markets. They are the core liquidity tools of how whole markets function, all crypto markets function. And if there is no clear rules about, for example, guaranteeing the peg of the stablecoin, then the whole crypto markets could collapse. So there is no doubt about the fact that clear reserve and rules on stablecoins have to be implemented. the things I could add on stablecoin is that they could also play a role on so-called traditional financial market. Maybe we say a word on that after on tokenization. But what we saw is that it could be also an interesting asset in terms of wholesale settlement of crypto financial markets.
Cool. Matt, just to close on stablecoin, you want to give your view as a stablecoin issuer?
Yeah, definitely. So, well, I mean, I think the first thing is that the value of stable coins is that they are transferable peer to peer. They're fungible, so they can be used to deliver value anywhere in the world within seconds. So this is the great benefit of stable coins and the improvement that they offer versus today's cross-border payments. And it is a challenge for regulators. How do you meet your regulatory objectives when you have an instrument that is being used across borders that might not be issued, might not be backed in your jurisdiction? So the EU has taken a sort of relatively protective approach. Like I was saying earlier, stablecoins that are offered in the EU need to be issued, regulated, backed within the EU. And that essentially is a potential friction that would prevent the benefit of stablecoins from being realized, because you've got someone in the US who wants to make a payment into the EU. You can't use a global stablecoin for that because that stablecoin can't be used within the EU. So essentially you have to sort of use some local stablecoin in the EU, which reintroduces these frictions of intermediaries, conversions in the process. Okay, so there are practical solutions to this problem, and one of those is being sort of looked at in the EU at the moment. So, for example, there's a model which is known as the multi-issuance model, where a stablecoin can be issued in more than one jurisdiction. Their backing assets can be held across different jurisdictions and moved in the background to support redemptions from local coin holders. So that model has been implemented for one firm in the EU, Circle in France, Charles' colleagues at the ACPR. There is a lot of regulatory uncertainty at the moment about whether that model can be rolled out to other stablecoin issuers. But I think it's actually a bigger challenge than that. When we look at the approaches taken by regulators all around the world, how do you preserve the international fungibility of stablecoins whilst also making sure that they conform to the local regulations?
Let's talk about tokenization. So I mentioned it before, like capital markets and value is really moving on chain. It becomes an increasing areas of interest for financial institutions and obviously for regulator. I guess the first question is more kind of a technical question. Like historically, it's been quite a while that companies are trying to tokenize things and see if it's useful. And part of like discovery process is also like the infrastructure discovery process. A lot of it has been done through private blockchain, and now there's more and more that is being done through public blockchain, thinking about what Ondo Finance is doing, or even like BlackRock with the money market funds. As a regulator, like how does that impact like the way that you think about regulating tokenization, like the core underlying infrastructure, and this question of like private blockchain versus public blockchain? Stefan, if you want to.
I start again, of course. Tokenization is also something that is growing for quite some years now. So we have seen, even back in 2017, 2018, the first tokenization projects that have been discussed within the FMA with possible applicants. I think there are, from a regulatory perspective, and my academic background is I'm a lawyer. So I'm a lawyer and have postgraduate in economy, but sometimes I see it from the perspective of law first. And it depends so much on the project that you have. So for instance, what we have seen in Austria, tokenized bonds, tokenized investment fund shares. And with all those products, you are in the area of an already regulated framework. So especially when it comes, I think one of the main opportunities that tokenization offers is if you have an illiquid asset, for example, you can create liquidity. We have seen that with real estate in Austria, for example. We have seen a lot of tokenization of real estate. And some of these projects, they did fall because of how the project was built within the existing regulation, especially within the remit of the Alternative Investment Fund Manager Directive. And then if you have a tokenized security, you fall within the remit of the MiFID. So this is the first area. Then what we see now is, and has also been there in the market for a couple of years, for instance, tokenized precious metals. If you think about Paxos and other, now you would say asset reference token in the MiCA jargon, those are things that would fall naturally under the remit of the MiCA. Still, for example, you have, and then I talk again about the struggles that a regulator, and maybe every read of the law has when it comes to the MiCA and also when it comes to tokenization, this differentiation between existing regulatory frameworks and the MiCA. Because if you think about Paxos Gold, for instance, you also have alternative investment funds that have a sole investment in gold. And then it gets tricky. How do you differentiate between those? And so this is where I think also regulators, but also the European legislator, maybe in the next projects, which could also be MiCA 2, this is something where we have to also create legal certainty for all the business entrepreneurs out there, because you need this legal clarity. And that then I come back to my first answer on this panel. What we have done and what we have tried is to give this legal clarity, and we have taken the approach that things that fall under the MiCA should have the room to grow under the MiCA. So a lot of tokenization is going on. I think this has just started. This will grow more, and I think the regulatory frameworks needs a little bit of fine-tuning when it comes to this. Hope that helps.
Yeah, Charles, can you give you a perspective from France and how you approach regulating tokenization? And because it seems that, like as Stefan is saying, is like there is no like one regulatory framework for tokenization, because it comes down eventually to the underlying asset, to the use case, etc. So I guess two questions is like, how do you approach it, and maybe like, do we even need like a regulatory framework for tokenization? Does that even make sense?
Yeah, well, first of all, I think there is no doubt about tokenization is one of the most promising innovation in capital markets. I think, Stefan, you mentioned them, but there are such improvement, and it could be very huge improvement on settlement processes, transparency, and even we saw greater market accessibility for savers. So yes, but how we took this, how we embrace tokenization in France? Well, also quite back in the days, I mentioned ICOs, but back in the day we were speaking about STOs, also security tokens offering, and we published a legal analysis on that. I think it was 2018, and from a regulatory standpoint, what you can do with the traditional regulatory rules on financial markets and what you cannot do. And the conclusion was there is no problem based on the current financial rules, EU financial rules, to issue security tokens, but you cannot, because of many legal points, you cannot exchange or deliver a financial tokenized instrument. So the idea, and that's what we push in this paper, was to create some kind of laboratory, experimental laboratory, we call that in this paper a digital lab, to experiment in production in real-time financial markets on blockchain. And that's what began, that's what created the EU pilot regime on financial market infrastructures. I think the EU DLT pilot regime came into force 3 years ago, something like that. We have to be honest, it's not a great success. Not many firms has choose this regime, and that's why a few months ago we chose to publish with our Italian colleagues a paper calling from reopening this pilot regime and to make it more attractive. I think we cannot stay, with some kind of close view on what regulatory framework for tokenization should do. We have to clearly open experimentation to give more power to the authority to determine whether you could allow some, for example, some thresholds to be unlimited or something like that. And I think it's important way to do, and especially when we compare it to the more recent UK digital sandbox, which could appear like more open. But like you said before, early mover, it's always hard to be an early mover, and I think the same apply also for EU DLT pilot regime.
Matt, do you want to tell us a little bit more about the UK approach and this like sandbox approach that they're taking?
Yeah, definitely, I can do that. I mean, I think it's worth saying that, echoing what Charles said about tokenization being a very promising development, and it's very aligned with the objectives of the authorities, both in the EU and in the UK, because it has the potential to increase productivity, efficiency, for firms right across the economy. This is not just something that's relevant for crypto firms. This is relevant for all sorts of firms, and it also sort of reduces the costs of raising funds, which could be relevant for lots of small, medium enterprises. So it's very aligned with the growth and competitiveness objectives, but both the EU and the UK have. But I think there is this challenge for regulators that, at the same time, these financial market infrastructures that we rely on are absolutely critical. From a financial stability point of view, you can't have something that takes a risk with these sorts of important national infrastructures like clearinghouses, payment systems, securities depositories, etc. So you have this challenge of trying to support innovation, but at the same time try to mitigate the risks. And I think what's called for is a sort of smarter type of regulation, where you allow a greater variety in sort of the ways that firms go about doing business, including using new technology, but you mitigate the risks in other ways. And I think what we've seen is the use of sandboxes. Charles and Stefan talked about the DLT pilot in the EU. The UK has a similar sandbox approach, the Digital Securities Sandbox. I think that the DSS it's known as, I think this actually adopts quite a nice solution that balances the costs and the benefits, because the way the UK sandbox works, you have limits that constrain the activity that can be done in the sandbox. But as firms get more regulatory confidence, as they implement the sort of controls that the regulators are looking for, they're allowed to progress through a series of gates, and the limits get higher and higher as they progress through those gates. And the idea is, ultimately the limits would just be lifted entirely, and then the firm is then in the real world, as it were. And that's different from the DLT pilot, which does have these very restrictive limits that can't be changed. The DLT pilot also doesn't have a sort of route to the mainstream in the same way. It's very much a sort of experimental pilot. So it's that sort of approach the UK is taking is much more attractive from a commercial point of view for firms looking to participate.
Very interesting. What time is it? Okay, cool. Last topic I wanted to talk about, because there's been some news around this recently. So the chairman of the SEC, Paul Atkins, very recently come out saying that DeFi represents the American spirit, and self-custody is really like a foundational American value. This is what he said. And so in Europe, obviously the first approach, and the MiCA is regulating custodian businesses and VASPs and basically businesses that are holding customers on behalf of crypto. So you mentioned, Stefan, MiCA 2. What is the place of the role, and how DeFi is viewed in the next iterations of MiCA, and how this self-custody element is seen or will be seen in the next versions of MiCA? Is the European institutions thinking like Paul Atkins, basically? Do we have the same values than America?
I offer the perspective of the Austrian FMA on this, especially when it comes to DeFi. So DeFi is something that is, of course, also discussed quite a lot in the European committees. From my perspective, also speaking for our authority, I think DeFi is already to some extent regulated in MiCA. It's barely mentioned in MiCA, which makes it difficult. It makes it so difficult because it's only mentioned in a recital. And then you have arguments about the legal quality of some recitals, but they are not contradicting the rest of the MiCA, so I think the recital is quite viable. And the recital is mentioning, basically, I think it's 22 fully decentralized applications without intermediaries, they are out of scope. So the next question is, and I remember historically what was in mind also of the European legislator when this was discussed, at least when this was also discussed with us. So the thing with DeFi was always based on one fundamental fact that exists. To have effective supervision, you need to have some supervisory subject, an entity that is identifiable. If you don't have it, you cannot supervise it. So this means, this is how I understand fully decentralized. However, from our experience, that is not something that we've seen a lot in the market. What we have seen in contrast is, we have seen a lot of players where there is governance token dominance, where there is the possibility to retain admin keys, where there's the possibility to trigger kill switches. And then the question arises, are these really fully decentralized protocols? And if you then look in the internet from some of those DeFi players, you also see job offers from those entities, and that gives you even more indication that these are identifiable supervisory subjects. And then you have to think about, are there risks for the users of those protocols? And if there are risks that are covered by European capital markets law, and you have an identifiable player that produces this risk for its users, then it makes sense that those entities fall under the scope of the MiCA. And then what gets a little bit tricky is that the MiCA is not really designed to regulate decentralized applications. So this is not really friendly for decentralized applications, even though you have an identifiable entity. And this makes it also tricky for a national regulator to kind of set up a stage where you can provide regulatory clarity and where you can provide the room for those entities also to grow and to provide their services. And I think there lies also the aspect that should be addressed to the European legislator, to touch base on those DeFi protocols when it comes to MiCA 2. But I think it's already regulated.
Charles, anything to say on DeFi and the custody, the self-custody aspect?
Yeah, from our point of view in France, we really think that DeFi is, first of all, a radically new financial ecosystem. I think if we compare, for example, CASP to traditional financial players, of course, the products are different, the way of safeguarding custody funds are different, but at the end is some kind of the same services you're providing to investors. With DeFi, the products are different, the way of trade products are different, and even the way it's commercialized or the governments operates on this protocol. So you have a whole scope of the way things are organized on DeFi, which is quite different. We published something on that last year, and to assess whether, and I think it's a more important point when you talk about DeFi, whether DeFi is truly decentralized or not. And that's the key things for a regulator, if somebody should be or could be responsible for the activities they are carrying. What we saw is that, the line in reality is very blurry. We don't really know exactly, for example, when the governance of the protocol is controlled by sometimes a small group of persons. So either this 1 or 2 persons could have a direct power on and authority on this protocol. Stefan, you mentioned killer switch, for example, that exists also on protocol. Sometimes also you have a user interface, like front-end interface, who could be a direct centralized point to a controller. And most of the time also oracles on infrastructures also could be considered as some concentration points on DeFi. And on the other hand, what could a regulator do, to assess whether this is centralized or not? And if it's centralized, what could we do to limit the risk which can be involved in the protocol? And we led some work at the MF to assess whether a smart contract, for example, could be auditating. And I think the auditability of the smart contract, and maybe to have some industry standards to more, assess whether a DeFi protocol could be valuable or not, I think should be the key. But I don't see any regulatory development on DeFi the way we had put in place MiCA, for example.
I guess as long as it's not banned, it's good. Not banned is maybe better than being regulated. Let's move to the next panel. Thank you very much, guys.
Thank you.